Good morning, this is Jim Cramer with Jeff Marks for the morning meeting, exclusive for the CNBC Investment Club. And boy, do we have a lot to say. Let's just start with the market being higher. Now, one of the reasons I think we're just really taking the hand off from Europe.
They're talking about a return to growth in the quarter, a lot of it being fueled by demand for AI chips. You have that, and then, of course, an upgrade of the largest company in the S&P 500, Apple. I think that changes things too. We'll see if that lasts longer than the over the lunar holiday. But I think what Bank of America in their longer term view, what they're looking at is a multi-year iPhone upgrade cycle. And maybe, there's some people out there that maybe want to hold every 3-4 years they'll upgrade. Well, maybe that narrows it, and that would lead to stronger iPhone sales.
Downgrade tomorrow. This was a very counter upgrade, and therefore it has far greater impact because an analyst is just saying, okay, I'm drawing a line in the sand. Analysts don't like to do that because this fellow is now really out there. And they're the first people who have said that the Vision Pro could be significant, even as Netflix did not yet commit to Vision Pro.
I liked what they said about the Vision Pro. I'm glad you brought it up because they're talking about, all right, yeah. No.
And that's how we think.
And we know that one app that will be on the Vision Pro right away is from Disney. And we had some news with Disney earlier today. Nelson Peltz coming on Squawk on the Street, laying out his case why he feels like he should be on the board.
Now, Nelson Peltz on this morning, as you mentioned, the stock has been horrible, as it continues to be, which is really the true gripe of what he's against.
Another one, too, was he wants to get streaming margins to Netflix-like EBITDA margins, 15 to 20% by fiscal year 2027. We don't know what Disney's targets are beyond this profitability goal in the upcoming September.
Right. Look, I think that one of the things that you have to understand that this is something Disney really hates to talk about. They paid a huge amount of money for Fox, and they got crushed.
Yeah. So, and then you mentioned mistakes. Well, Humana is one of them today. Unfortunately, it's falling after lowering its earnings estimate for the year. They disclosed that their Medicare Advantage growth was below industry trend. We were very perplexed by the action after that reported deal. For smallest position, we're selling the rest of it today because the thesis has been about above industry trend Medicare Advantage growth. Yeah, so the news today, according to The Verge, their Google CEO is telling employees to expect more job cuts this year, maybe not to the same magnitude of the 12,000 they did last year. They want to make sure they have enough investment capacity to continue investing in some of their more ambitious plans in AI.
And just so you know, in the way we work, I was thinking and leaned on Jeff. My view was that we should sell more. And you pointed out that if they just do a couple things right, it's been disappointing. They got to get back. Well, anyway, this is Jim Cramer with Jeff Marks for the morning meeting, and we will talk to you later today for the home stretch.